How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for May 2nd, 2017. Here's the report that I submitted this weekend, and some interesting stuff for you to see here. If you just take a look at the data, you'll see what the institutions have been doing in the last week or so. Alright, so let's get down to gold and see what exactly the institutions are doing with gold. Alright, so we see that longs have they're still aggressive longs, but we're dropping from last week. So we were at 287,000 and now we're dropping down to 276,000. Still aggressive. You see the coloration here is still red, so we're still aggressive, and they pretty much did nothing with their shorts. I mean, over the last 4 weeks they've added from 180,000 or 80,000 to 86,000, but in this last week they did nothing, and that last week right here is this candle here, this indecision candle. So obviously next week's report we're going to see some shorts being added to, and then we got this big drop, but as of this moment here, longs were still very aggressive as of that candle right there, that indecision candle. Alright, so now we have a weekly supply zone nested within the monthly supply zone in control, and now we have this what's being formed here, a bearish engulfing. So for it to drop down to the bullish engulfing is to be expected right down here. And then we should get a reaction from somewhere down here. So I'm looking at this area here, not the greatest area of demand, but still a demand zone. And the reason for that is, let's just bring up the chart, because there was a reason why I was looking at that I want to mention. Right here. So here's the reason for that, because if you drew a trend line down like this, we've hit the trend line and we're reacting down to the downside. But if you drew a trend line like this and ignored that tall wick, this zone here, which eventually became respected right here, although it did not take out any supply or demand or anything here, it didn't take out anything. To me this was valid because I was looking at that trend line. So if I'm looking at that trend line and that's valid, then obviously this zone has to be valid. So since the charts have shown me that this trend line is valid because it later on price came down and respected that area, I'm going to accept the fact that that trend line is valid, and I'm going to be looking for longs down here. Alright, so just wanted to make mention of that. So long exposure drops 1 point, which is not much. Coloration of the cells is still somewhat green, so still long bias. It seems like over the next few weeks what might happen is we might see longs being closed out. We may see some shorts being added to, because we might see, you know, a test here before a drop down here. Or who knows, we might see a drop down here and then an accumulation and then a move to the upside. But I don't think that's going to happen, just simply because of this formation here, this candle here. Looks like it's going to drop down here. So I'm not going to be taking any positions in either direction until I see what the institutions are doing here on this side. That's what's important to me. I want to see what the institutions are doing with these numbers here, and then I'll wait for clear setups. If price comes down here and gives me a nice confirmation trade off of this area to the upside, then I'll take longs, especially if they're adding longs here and closing off shorts. Then I'll be definitely more inclined to do so. Alright, so that is gold. Let's go to oil. So oil, we see longs are increasing, becoming aggressive. Alright, from 618 to 630. But as that was happening, shorts are also becoming aggressive. A big increase here. Why? Well, that happened right during this that candle there, that weekly consolidation candle. So they were adding shorts while adding longs. So that tells me they are hedging. So they're expecting price to drop even lower, but they don't want to lose on the fact that they're adding to their longs, so they add to their short. So what ends up happening is long exposure drops from 75% to 71%, and if you take a look, that actually puts things in a very neutral territory. Okay, so look at the coloration of the cells, blue. So that tells me don't look for any trades right now. And I think that's great advice, because we're dropping into a non 2-to-1 monthly demand zone, and since we're hitting a non 2-to-1 monthly demand zone, we know that price could just break and continue dropping, especially with the fact that we're hitting a 3-month bullish or bearish engulf, a 3 and 6 months bearish engulf. So there's force behind that, and a non 2-to-1 monthly demand zone may not be strong enough to hold price. So this could eventually break through. I mean, this zone's already broken through, making this a valid supply zone. I know that this is also another level right below it, but this was a level here that caused the break of the supply, so that's the important level to me. I still wouldn't want to take shorts into this area, because obviously I'd want this area out. I'd want this monthly demand zone out, but I am respecting the fact that this area took out this area, which was respected here, and which took out a supply zone up here. So so that's what I'm looking at right now. I'm waiting to see what the institutions are going to do, if they are hedging. If next week we see more shorts being added to while longs continue to be placed, then I'm going to be more inclined to look for long setups to take this to the upside. If I don't see that, and this is just temporarily, this hedging position was just temporarily put on by the hedge funds, then I'm going to wait for this monthly zone to be taken out, and then I'll take shorts. Especially if I see shorts continue to add and then longs starting to be closed out, I'll definitely look for trades like that. But right now I'm not touching it. Coloration of the cells here are blue, which means stay out, neutral, there is no bias, so don't make any moves. So that's what I'm doing. Next is the US dollar. So US dollar, we've been saying for quite some time that we expect price to drop down here to this monthly area here, and it looks like we're starting to get that to happen. We are just about to test this weekly area of demand. Now I'm assuming what's going to happen with this election is that the euro is going to rally higher, and the US dollar is going to dip deep into this area here. But this is demand zone, so I'm assuming that we are going to get a reaction to the upside. So that reaction could be up to hit this trend line and then back down even further, or it could continue to go higher like this. Which one is it going to do? I have no idea, because we are hitting this area here, right? We're hitting a monthly trend line. So what I do know is that the institutions have added a little bit to their long, but look what they did to their shorts. I mean, this is not a little bit, this is big time right here. You know, from 6K to 10K in positions, that's pretty big. And so what ends up happening? That brings the long exposure from 89% to 83%, but more importantly, look at the coloration of the cells here. Blue. So that long bias that we've had for quite some time now, not so much, right? So colorations of the cells are, this was a little bit green here, and then boom, back into neutral territory. So right now, don't take any positions to the upside or the downside. That's what the coloration of the cells are saying. And so I'm going to respect that. Right now we are above the average size for shorts, which is quite telling. Alright, average size is 6.8, we're at 10, but long positions are, you know, just sitting below average, 51K, and we're at 50,000 right now. So that's not really telling us anything, but I think this coloration here is what's important. Even though we're 83% geared to the long side, the short-term bias is neutral. Sit out, wait it out. I'm going to wait for these colorations to turn either red or green. I'm going to wait for signs from the hedge funds to show me what they're doing. I think long-term we're going to get this drop down here into this area here, into this monthly demand zone, and then from here I'll look for signs to go up. So right now I'm not going to be touching this, and it makes it a little bit difficult because when planning trades on the other currency pairs, you kind of want to know what's happening with the US dollar. So short term I'm betting on the US dollar dropping, and I'll base my other trades off of off US dollar weakness. Alright, so let's go over to the Aussie. Aussie has been interesting. Longs remain aggressive. They really haven't changed their long positions, and they really haven't changed their short positions. Okay, long exposure still remains at 75. Net positions still around 42K. Nothing's really happening, but here's the deal. We're hitting this area here. Monthly WOW demand zone based on the trend line that I have drawn out. The obvious trend line, which to me is important. We can't ignore that. So I have a monthly WOW here, and we're testing it right here, and we see the reaction here. Right there. We see a reaction to the upside. So something's happening. If US dollar drops, then we could see a move up here, just like that, right off this area. Even though it's a non 2-to-1 area, we can see a move to the upside like that. And in my portfolio, I have a short on the Aussie Japanese yen, which I'm going to be closing off, because to me that short was valid up until this test here of this monthly area of demand. Sorry. So I'm going to be canceling that because it's not going to be high odds anymore. And I'm going to be waiting for signs that price does want to go up. We have a tested weekly area here of supply, so pretty much nothing to stop price from moving higher, especially with the US dollar weakness. I would like to see them add longs, especially on next week's report. Now that we've hit it here, I'd like to see that demand being filled, and I'd like to see just how much demand is being filled by this monthly area of demand here. So I want to see big numbers next week's report, and I want to see shorts either remain the same or get closed off. They're in very cool territory right now, so they could even increase, and that wouldn't throw me. I'd still be looking for longs. So that's what I'm going to be waiting for. So I'm not going to be taking any trades that are Aussie related until I see more of a conviction from the institutions to go in one direction. Okay. So USCAD, I've got a position open to go short this pair. With the US dollar weakness, it seems only fitting to want to take advantage of this strong move up here. Alright, we're hitting a weekly supply zone, which I've had drawn out for a long time now, and I've been waiting a long time to see price touch it. So it's hitting a weekly supply zone, which is nested within this monthly area of supply, and we've also got a daily area in there that's been hit, and a 4 hour. So I didn't want to take a location trade based off of that. I had originally set up a trade to short the 4 hour zone nested within the daily and the weekly, which has been hit, and price is reacting nicely from it right now. But I canceled the trade because I thought maybe taking a confirmation trade would be a little bit more secure. So that's what I'm going to do. I've got a 4 hour WOW ready to be triggered. I got the order in. We got a really nice heavy drop from the area on Friday, and it took out the opposing zone, which was exactly what I wanted right here. Here's the opposing zone right here. Massive drop, boom. Now I'm just waiting for this target 1 and then target 2, which is right before this area here. Nice area of demand, which I think long term will be broken because price will most likely want to come down to this area here, a weekly demand zone. Since we have a monthly area being hit and we got the uptrend on the weekly, you know, we're going to want at least a weekly demand zone to take longs again. So once price gets down here, yeah, right here. Once price gets down here, I'll look to take longs. So I think price is going to react to the downside from here, especially with this type of candle and this bearish engulfing, daily bearish engulfing at a weekly supply zone, 4 hour WOW, boom. I think that's high odds. I know it's best to wait for a daily while, but in this circumstance, I think it's worth the risk taking this 4-hour trade. Alright, so let's go to the US Swiss franc. Swiss franc longs have been closed out, about 2K of longs right here at this candle right here. 2K longs, and shorts also closing out. Overall exposure drops from 32K to 26K in positions. But as this happens, the long exposure increases from 77% to 83%. Nice increase there. Net positions just increase about 400, positive 400. So, tested area of weekly demand. Price should drop down a little bit lower, and then we'll see what happens from there. I don't trade this pair very often, so we'll just wait and see what happens with this one. The euro. So like I said, after the election results, I think we're going to get a gap up, which is already starting to form here. I mean, we've been waiting for this to happen for some time because we had this area of weekly demand. Price hit the demand. What happens when price hits the demand? It goes up. So, and the only other supply was this one up here. So we got the gap up and the rally higher, and we're just about to hit this monthly area of supply. So what are the institutions doing? They're adding to their longs. Longs are still very aggressive. Shorts, they took off their shorts for profit taking, and long exposure continues to go higher from 47% to 50%. So, but you can see the coloration of the cells are bright green, which means, you know, they're very much biased to the long side. So deeper here, reaction to the downside, maybe hit the trend line, maybe go even deeper, or break through and drop lower. Once we get to this area, if we get to that area, I'll see what the reaction is like from this weekly supply zone over the next few weeks, and then I'll determine whether I want to go long or short this one. But obviously I wouldn't go long now because we're pretty much hitting supply. It'd have to be down these lows off of a reaction using a confirmation type of trade, and I'd have to see the data supporting the fact that the institutions are thinking along the same lines. Alright, let's go to the next one. Pound, US dollar. Institutions are long, very aggressive with their longs, and we see the move that we got to the upside, which we've been waiting for quite some time to happen. Shorts were closed off with this candle, obviously closing off shorts as price is heading higher, and we are hitting a weekly supply zone nested within a monthly supply zone, and they're both valid. So the fact that they're both valid means price is going to drop. So even though we have this aggressiveness on the long side, coloration of the cells are blue. So they're telling us to do nothing, sit back and be neutral. So that's what I'm going to do. I was planning on taking a short off this area. I was just looking for a nice type of confirmation trade on the 4-hour, which didn't happen. And I will still be waiting for that, waiting for strong signs of selling pressure to come into the market. And then if the right setup presents itself, then I'll be looking to take shorts down to this weekly area of demand here, similar to the USDCAD chart. Alright, so next one is the US dollar Japanese yen. What do we see here? We see longs dropping off from 75,000 to 68,000 as price rallies and consolidates. And then we had shorts close off. So shorts are pretty much very cooled off, and longs are still somewhat in aggressive territory. The only thing is that long exposure goes up 3 points. Net positions go up from 26K to 30K, which is a pretty decent jump. And we're hitting this area here, which is not supply, but it is a very significant area here that broke down through this consolidation. Boom. So I'm expecting some kind of a reaction from this area, plus we got this trend line going down. So something's got to happen at this area, a move downwards, but I'm not planning any trades. As far as I'm concerned, I don't see what's going on here on this chart. I don't know if it's going to go up higher, if it's going to go lower. US dollar is going to be weak, so is this going to follow suit, this reaction here? probably is what I'm guessing. We're going to see a reaction to the downside, but how much further is it going to drop? Is it going to continue dropping further? Is it going to reverse? So too many questions, I don't know, and so therefore I'm staying out of this one. I'll wait for the institutions to show me the signs, and then I'll wait for the charts to give me some clear setups, and then I'll make my move. So the New Zealand Kiwi, I have an order to short this one. Longs are very cooled off. Shorts are somewhat aggressive. Long exposure increases over this past week, 3 points from 35% to 38%, and net positions drop from -15 to -11K. So we had this drop. Now we have this consolidation away on the weekly zone. So the weekly area is valid, and the daily supply zone nested within it is valid. So we could easily see a continuation of the move to the downside here, but with US dollar weakness, that makes me feel like we could get, you know, some more bullish pressure here on the New Zealand. So shorts are the way to go. I'm just playing the technicals right now, and we'll see if we get the trade to the downside. I'm leaving my order in because, as far as I'm concerned, the charts look poised and ready to have a drop. So I'm going to let it do its thing. And that's it for all the major currency pairs. Let's take a look at what I have for the news, the data coming out. New Zealand rate released on Wednesday, and the pound releases their rates on Thursday. Alright, so that's pretty much it for this week, guys. Be safe out there, and we'll see you in the market.